Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 5th, 2010. Well, folks, we just hit a beautiful double top. Again, I gave the short alert in the intraday stock chat, or my partner did, as he had discussed and given out. I gave it before I went off the microphone this morning. It was a beautiful short scalp, waiting for the pierce of the high. This is the upper blue line right here. And it's, again, a no-brainer trade, but the key is most traders are not patient enough to wait for it. They're trying to do this, they're trying to do that, they're trying to force trades. Be patient, sit back. Look at this perfect double top from Monday's high. Pierce, you always wait for the pierce. For those of you that follow the In the Money Stocks methodology, you wait for a pierce of a couple pennies, you go short, and look at the nice gains now. Right now, you're hovering up about 15 plus cents on that trade. And again, we're talking an intraday trade right now in the SPY, but it's more important to know the levels, because the levels will be the same on the daily chart, the weekly chart, the monthly. If I'm a swing trader and this was a daily chart that you're looking at, guess what? On a daily basis, I'm shorting on a pierce here as well, and then look at 1, 2, 3 days of pullbacks. It's just that simple. And again, you just have to be patient. You work on your discipline. That's what we help our members do in the Research Center and in the intraday stock chat. And again, you can join both very, very cheap for the whole month. It's a beautiful thing. In any case, that's your double top today. That should work in the short term to continue to be resistance. We'll see how much of a pullback we get off this level. Right now, the markets are trading up ever so slightly. Dow up 37 points, NASDAQ up 15, and the S&P is up about 5. We're talking about 1/3% to 0.5% gain today. And again, it was a very interesting morning for a couple reasons. First off, the futures overnight were down 10 points. That's the S&P futures. We're not talking about Dow futures here. We're talking S&P, which would equate to about 75 to 100 points on the Dow overnight futures being down. Now, the reason why was because the dollar was screaming and commodities were getting crushed. We saw gold take a big hit yesterday. Remember, gold took a huge hit yesterday. If we go to the daily chart of the GLD, you can see, look at the big drop the last couple days. You're finding a little bit of support right around here right now today, just down 50 cents on the GLD. But with commodities selling off globally, and again, the dollar screaming higher, remember the inverse, the market goes inverse to the dollar. So if the dollar's screaming up, which it was overnight, then obviously, and we even had a gap up on the dollar today right here, then the markets should be lower. However, coming into the 8:15 a.m. session this morning, you got the ADP jobs number. That's a private sector jobs report to be released. Now, that private sector jobs number blew out expectations. 297,000 jobs in the private sector were created. Now, many people don't believe it. Many people think it was holiday hiring, but nonetheless, it was a positive number. So the futures pared their losses all the way down to about -3. And you might say to me, well, if the S&P was -3 at the open, I don't understand why they're up now. I mean, if the jobs number only took you to -3 on the S&P futures, why are we now on the futures up 6 points? That's 9-point move higher, even though the ADP jobs number was already factored in after that. And I'm going to tell you why right now. First of all, you have to remember new money is continuing to flow in the markets. New money, remember, comes in at the beginning of every year as 401k money and IRA money comes in addition to the new quarter. So you also have money coming in for that purpose based on new quarterly investments. Also, you have light volume in the market, which always bodes positively for the market. In addition, one more thing here, you always have POMO. Right now, the Federal Reserve, their continued propping of the markets, permanent open market operations. This again goes back to the QE2. They're using that $600+ billion in a daily fashion, using some of it every day to buy treasuries. And that's called POMO, Permanent Open Market Operations. Now, when they do the Permanent Open Market Operation, what ends up happening is they buy the treasuries from the banks. The banks use that money to prop the market up. In addition, the Fed is continuing to print money, as we know, the $600 billion, etc. That keeps general pressure on the dollar. And the dollar, since the opening gap up, has actually pulled back, which has helped push the markets up. So there's about 4 different reasons why the markets opened lower, even though you had the ADP jobs number being very good. A lot of traders still not believing that number. But then again, you add in the dollar falling off the highs. You add POMO in, which is Federal Reserve propping. You add in light volume. You add in new money for the new year here over the first few days. It all has shifted the market into positive territory for now, but not that much. Again, we're up about 30 and change on the Dow. S&P's up about 5 points or so right now in current times. You can see continued pullback. Anyone who took this short with me this morning or around midday right now, based off the double top, it's just a beautiful pullback. And again, I love when this stuff works out so perfectly and I can do these free videos for you because I think it really gives you insight into how important it is to understand. Understand the levels, understand the market, look for bullish, bear flags, whatever you may want in terms of our methodology, and just put it and apply it and make money off of it. And again, I've talked about how good the market's been over the last couple of weeks, even late last year into the end of the year 2010. The small caps have been going crazy. In fact, we had great moves today. I had called out DEAR over the last couple of days to the chat room. Today, DEAR takes off all the way to 195 from 170. Tremendous move there today. DRL was another one that took off beautifully here, and you can see a pop there after we talked about it in the intraday stock chat. Just beautiful moves here. And again, I still love this DRL. Other stocks, ANRA, I had given to the chat room a few days ago as well, and look at the move that it's done since then. We noted it right here on the breakout, jumped in right around here. It popped, pulled back, popped again. And you can see popping again today. There's been about 4 or 5 other plays today we've talked about on the small cap front that look good. One of them that I like is the ABIO. ABIO is a small one. I like the bullish consolidation pattern here. You can see it's already starting to break up. Another stock I gave out yesterday in the intraday stock chat that made a major move up today was the BSDM. Look at the pop on BSDM today, going basically from $4.60 all the way to over $5. 10% move is there. And again, I could just throw out more and more of these, but it's been a great thing. Now on the large caps, you just continue to watch for some different plays. We can go back to the SPY, and if you look at the intraday SPY, I really only gave 2 trade levels out today. 2 trade levels out. One was a pullback into the 50 moving average right here. I said buy that. Sure enough, look at what the market did. And then obviously the double top short, which is the biggest no-brainer of them all. That was your double top short, and you've made good money on that. And again, half off the table, if not all of it at this point, for a 15, 20-cent profit. So those were your intraday trades on the SPY today. There were some trades on some large cap scalp-wise, but a little on the minor side. We talked about MCP, Molly Corp. That's just been a monster, although it is a little bit to the downside today. It'll be interesting to see. Looks like Molly Corp is actually stuck between 2 moving averages. Is it going to break down or break up? That's going to be the bigger question in my book. Either way, it does look a little extended on the daily. It's just a matter of how much more juice is in the tank. You can see up 100% since December on that Molly Corp. And again, kind of weird because, yeah, they're a mineral Molly play, but at the same time, a $5 billion market cap for a stock that's only going to do $50 million in revenue and keep losses for the next couple of years, it seems a little pricey. But again, that doesn't mean they can't push it up. So I like to see if it pushes up a little bit more. We'll watch it and keep a close eye on it. And obviously, we'll be talking about it in the nightly videos as well as a lot of the other areas of the Research Center. Now remember, folks, Research Center includes daily market report, nightly technical analysis videos that I do personally, 30 to 40 minutes in length. If you find these interesting, then just wait till you see those nightly ones. Hot charts and alerts where we give out trade alerts. Pro Trader Watch List, which gives a bias on various stocks as well, bullish or bearish, and what traders are looking at. And of course, there's technical tactic, hidden gem. By the way, a hidden gem will be coming out in the next few days, either later this week or next Monday. One of those, it will be debuting. So be ready, guys. The hidden gem in this environment could be a major mover, and I mean major. I've isolated 1 or 2 different ones. We're continuing to watch, and they both look like they could be monster movers. All right. Enough said there. Let's just touch on a couple other things. JP Morgan financials continue to lead this market. I'm very impressed with JP Morgan here. JP Morgan, again, approaching that 45 level. 45 will be a little resistance on that, and it has pulled back off 44.95 level, coming back in just a bit. But look at that move from 37 all the way to 45 in about a month's time. For a stock that size, that's a very impressive move. All right. This afternoon, what else am I watching? Well, I like that ABIO as I spoke about. That's a good one to watch. It'll be interesting to see where the Molly Corp goes towards the end of the day. Is it going to squeeze higher or is it going to sell off? Again, we'll be watching that. Cisco is having a good day, up 30 cents as that continues to climb back after those ugly earnings a while ago. And small cap wise, let's see. Is there anything else that I like? CPSL having a good day. GSI having a good day. Scanning through here. It seems like about it for now. Interesting to see U.S. Steel. U.S. Steel was a fascinating one. U.S. Steel gapped down today and pushed down to a point where it was down $1.50. It's now reversed up 50 cents. So a $2 reversal on U.S. Steel. It's a good reversal. Still a very toppy chart. But again, we've seen some good reversals. The dollar has fallen back in. That's helped keep these commodities up. Chevron was down as well. It's now up 25 cents. Chevron will continue to have resistance, though, upwards of the... looks like around the 92.50 area on the charts. All right, guys, enough said. Come join the Research Center. If you want to get some intraday analysis and action and swing trades, join the intraday stock chat. We're here for you, and we will be making money. Join us now. Talk to you later.